Hey folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, November 9th through Friday, November 13th, 2009. Well, as we get started today, folks, I want to focus on a lot of different time frames. I want to cover a little on the intraday 10-minute, the 60-minute, the daily, and maybe even we'll touch briefly on the weekly or the monthly to go over a couple odds and ends. But overall, the overall technical picture of this market remains somewhat jaded by the fact that the market still has not gotten through that Great Wall of China level that we picked out so perfectly for the last big drop from about 110.30 all the way back down to the 104, 103 level on the SPY. Now, we utilize the SPY here because it does give us a good analysis technique on where this market is headed based on its comparisons to the S&P 500. And again, right now you are looking at the intraday from Thursday here and Friday on the 10-minute chart, and you can see that the market for the most part trended sideways up on Thursday and Friday. Now, the key is that I've talked about and kind of taught about as we do all this guidance and education in the Research Center plus in the intraday stock chat is that the market is very volume driven, number one, and dollar driven, number two. And that really has been the case now since March, April, Mayish, even throughout the summer and into the early fall time frame now. As we enter into mid-November, starting next week, you have to start to say to yourself, well, is the volume going to continue to be the dictator of where this market goes? And is the dollar? Why? Well, because the dollar, since the highs in March, and again, let's go to the daily chart on the UUP to give you guys a good sense about what this means. Since March, the dollar until very recently has really come down. Now, what does that mean? Well, if you go back to early March, and I'm going to actually go to the weekly chart on the UUP here, you can see that here's your March pivot, right? On the dollar right here. See this high was made in early March. Here's March down here, M for March. As the dollar hit those highs in March and started to retreat, that's exactly where the market bottomed. You can see that perfectly. See this right here, folks? Look at the channel move down in the dollar. Now you can see recently we've had a little bit of a pop in the dollar, and that coincided with that pullback from 110. But you can see, nonetheless, this market is perfectly trading in the opposite pattern of the dollar. Now that is so kind of weird to many people that are just into stocks, because those of us that are into stocks say to ourselves, well, shouldn't it be based off earnings? Shouldn't it be based off multiples of, EPS? Shouldn't it be based on fundamental stuff? And that's really why it's so important to be a technical, trader or investor, because you have to see these bigger pictures. And again, one thing of interest here, very, very interesting, is that you can see the M pattern on the dollar, which does tell us that a continued pop may be very, very likely. And remember, if the dollar goes up, the markets fall. Markets fall when the dollar goes up. When the dollar goes down, markets will rise. And it's just that way. It's just that opposite technique in this market that continues to be. Now, if I'm looking at a technical pattern on this dollar chart, one thing I am seeing here is this M pattern. Beautiful M, double top right up here, the M pattern, and then you're beginning to form the A pattern right here. So if the dollar continues to advance higher like this, let's say we get the A pattern, which by the way is the same as the monthly chart on the S&P. You have the A pattern form, and we've had it since March form. But in any case, if this on the weekly continues to form on the dollar chart, you will see this market go lower, folks. It's just been that way. When you see the dollar move up, markets will fall. So that's the one thing that's telling me there's something going on here based off the pattern on the weekly chart of the UUP that could be of interest. Now again, I'll put up the SPY, and the other pattern I just mentioned before was that big MA pattern. Now why is this so worrisome, folks? And this is really why you need to become a technical trader, because if you go back to 1996, you have an M pattern forming on the charts. Now M patterns are extremely bearish patterns. The bigger the time frame, the more worrisome. If it's on the intraday chart, it's not that big a deal, frankly, because okay, it plays out, but what does that mean? A dollar drop on the SPY or something. But when you see it on the monthly chart on the S&P or the SPY, like here, here's 1996. As you move up and then slope back down, now, and then again, look at as I scan to 2003, we'll go to 2003 here and start to move up, and then again start to scroll over a little more. You can see the M pattern form. So there's your M, and again, I'll start all the way over from the left side and scan right. So here's 1996, 2000, we make the high, we come back down to 2003, then you move back up to 2007, and then you collapse. So you can see the big M pattern on that monthly chart. Now the problem is you've made the A pattern, or at least you've made a good portion of the A pattern, and what this tells us, and again, this is projecting extremely long term, this is telling us that over time we need to be very, very concerned about a second leg down or another leg down in this market in a major way. And I'm not just telling us about going to revisit the lows. If an A pattern on the MA plays out, you are talking about Dow 3,000 to 4,000. When would you say? Well, believe it or not, you're talking about a time frame of about 2 years for this to play out. So again, it's not in the near term, and it's nothing that you need as a swing trader to be worried about. But I do want to bring it to your attention in this weekend video so that you can start to project and just be aware that this market is a very short-term market, and in the long term, you have to be a little concerned. And again, I'm not talking about in the next 6 months. I'm not even talking about in the next year or so. I'm talking about in 2011 to 2012 of being aware of this monthly formation, which could entail a move down to 3,000 to 4,000 on the Dow. All right, and that's a very little bit I'm going to tell you about that. There's other projections that are out there, but for now, I want to go into the intraday SPY chart. We'll talk a little bit more about Friday's action here in the last remainder of the little time frame here in the video for the weekend. Now, one thing you can see here, again, Friday and Thursday, just the market trended up. And the interesting thing I mentioned at the beginning of the video was that you had volume be very, very extremely light, folks. Very, very light volume on the Thursday and Friday session. And what do we know about volume? When volume's under 200 million, you will see the market's up or neutral. When it's over 200, it's down. And that has been the way it has held up. And sure enough, what do you think the volume was on Thursday and Friday? And the answer would be correct if you said the markets were up. They were up slightly, and that's exactly what you would expect. We did 171 million on Friday. Market slowly inched up, and it was one of the slowest trading days that I've really traded through, except for the opening pop and drop here. It was just sideways to almost non-impressive in the trading environment, at least for that period. Now, again, folks, a couple other things to mention here. If you go back to earlier in the week, you did see some big falls. I mean, look at the 30th right here, which was a week ago from Friday. We had that big drop on huge, huge volume. And then on Monday, we came in, and you had a little bit of a neutral market, a little bit of an up move Tuesday, Wednesday, Thursday, and so forth. But the volume continues to be key. Watch to see if you get over 200 million. Now, let's project into next week. And again, you can see a little bit of a triangle here on Friday forming, so you can watch to see which way you closed right at the high end of that triangle if you connect this high and the opening high. If you break through that high on Monday, you will go right up to here, which will be at 107.40. That will be a little bit of double top. If you get through that, you're going to go to a key level at 107.65 and so forth. On the way down, if you do come back down here, you're going to go to the support level right here at 106.70 to 75, and through that you will see the lows from Friday hit at 106 or so, 106.05. All right, if you get through that, then the target would obviously be down here, which would happen to be gap fill as well for right down here. All the way down here would actually take you to gap fill, and I'll draw that line in right now. So that's what you have right now on the charts at around 104.80 to gap fill on the way down. That would be a very significant scalping opportunity if you were to get it. But again, the key thing that remains is what about next week? What are we looking for on Monday? Well, number one, on Monday and Tuesday and even on Wednesday, you have to be prepared for almost no economic news. So again, I do think that Monday could be a very, very light day. Even Tuesday could. The only things that could change that are if you get some negative news or a big move in the dollar. And what do I mean by negative news? I don't mean economic news. I mean like geopolitical news. What if something goes on where the market kind of, is shattered by some geopolitical event, maybe in the Middle East or something like that? Then there's always room for that type of action to come in. But overall, you have to keep in mind that with no economic news Monday or Tuesday, you have to be on pause and be ready for this market to just float sideways to up. All right, now what do I mean? Well, Thursday is really the first economic news of the week, which would be initial claims, continuing claims, and so forth. So keep that in mind for this coming week. You want to be very, very aware of that. Again, initial claims coming on Thursday. Other than that, there's really not that much next week. You have export prices, import prices, Michigan sentiment. But again, that's all nonsense in the scheme of things compared to what we saw last week. Last week we saw ADP jobs number, unemployment, initial claims, just tons and tons of news. Also, there's really no earnings news. The earnings are now over, and you have to respect that as well. That is just the way it is. There are a couple stocks left to report. Priceline, Applied Materials. I see Beazer. Let's see what else we have. Electronic Arts, Dish Networks, that kind of stuff, but I'm talking about the big, big boys. One stock that does report next week will be Walmart. So Walmart would be, I guess, a big one, but other than that, I'm just not seeing a whole lot. And again, Walmart is not until the 12th, which will be on Thursday as well. Probably before the open is when Walmart will report. So watch later in the week for the more action volatility. Early in the week, really follow the dollar. That will be the driving force. Remember, dollar down, market up. market a dollar up, market down. It's that simple. Keep that in mind, folks. All right. Now, other than that, the other thing I just want to point out is follow the technicals. Come join the Research Center. It will blow you away. The levels that are called in that thing will make you a fortune if you play them right. It is unbelievable. You can get to that by going to inthemoneystocks.com. In addition, the chat room is always #1, folks. The calls that we've been making on the scalps have just been mounting. Last week was probably one of our biggest weeks ever in profits, so we do encourage you to come join that, and you can sign up for that at inthemoneystocks.com, intraday stock chat as well. Take care, have a wonderful week, and we'll talk to you tomorrow.